Joining us now with a preview, Paul Meeks, Harvest Portfolio Management Co-CIO. Already, Paul, we have seen, I don't think they're really traders, but we've seen some profit taking from certain people with Nvidia. It's up so much. Do you expect this to be blowout like it's been in recent quarters and the stock to trade higher? Since it's come back, but it has stalled for the last couple of months.
That's a good point, Joe. I would say that, the markers out there for $5.57 EPS, 24.57 billion in revenues, I expect them to easily beat those figures. What I'm specifically looking for is at least $26 billion in revenues. And I think if they do not beat the numbers by that much of a magnitude, I actually think some investors will be disappointed. So everybody knows that the near-term fundamentals are absolutely stellar, but the big question is, how long is the runway? What happens if everybody and their brother finishes building these large language models? Does NVIDIA continue to grow at these rates with this kind of profitability and cash flow? So, of course, what the company has to do on the conference call is give us what we need, a nice big beat for this quarter, good guidance for the next, and really make us feel, at least on a broader perspective, that there is a long runway here, that its competitors, which have been announcing competing products left and right, are further behind than people think. Even when these competitors ship their chips, they won't take as much market share from NVIDIA as folks think, and that NVIDIA will continue to have as dominant a market share in AI inference as they've had in AI large language model building. So we'll see. It's definitely going to be a thriller on Wednesday afternoon.
The AI market leader, Nvidia, is set to report earnings after the closing bell on Wednesday, and analysts expect the company to completely smash all expectations. In fact, Nvidia's earnings are expected to grow by more than 400%, while revenue is expected to increase by 242%, according to Bloomberg data. Nvidia being Nvidia, there's a lot at stake here. If Nvidia's earnings aren't as good as expected, the entire market could tank. On the other hand, great results from Nvidia could result in a rally for the entire market. In today's video, we will talk about some things investors need to know before Nvidia's earnings, as well as some concerns that analysts have been raising regarding the stock's performance in the future. Finally, we'll tell you whether Nvidia stock is a buy right before earnings or not. But first, if you want to keep up with Nvidia's latest updates and keep up with the stock market's latest news, you can follow our Twitter account. We post multiple times daily about the biggest changes and catalysts in the market, so click the follow button if you do not want to miss the newest market updates. Now, back to today's video.
We've seen stocks on a rally. We've sort of failed a little bit Friday to keep that going. Coming into this week, what do you think keeps the momentum with us? And do you think it's going to be Nvidia?
I think Nvidia is the big catalyst out there that might derail us. Clearly, we still have upside momentum. Now, it does seem extremely stretched. There are signs of froth out there, and therefore that makes me a little bit worried. But the overall backdrop, as we've talked all year, remains extremely bullish. The fact is, companies are still making good money. Earnings season has been fine. Growth is doing fine. And yet the world's policymakers are saying they're desperate to provide support whenever is needed. So we should be in a massive bull market. Has it become a little bit stretched in the short term? Yeah, probably. But until Nvidia, at least, I just don't see what derails it. And I'm not convinced that Nvidia should be what derails it right now. So I think it can go a bit further.
Nvidia stock is up roughly 90% in 2024 and more than 200% over the past year since the company kicked off the AI hag train. When we look at Nvidia's stock price chart over the last couple of years, it is hard to argue that the stock is not overvalued. However, Nvidia's premium valuation is justified, and I will tell you why. Nvidia checks all the boxes that growth investors look for, as the company is converting nearly $0.50 on every dollar in sales into net income, not gross profit or operating income, but bottom-line net income, which is an incredible achievement, especially at the scale at which Nvidia is doing it. Adding to this point, out of the 36 EPS revisions Nvidia got from Wall Street analysts in the last 90 days, only 2 were on the downside, while 36 were on the upside. Nvidia also has extremely high operating margins, even higher than any other Magnificent Seven company, and this is expected to continue as the company develops its software offerings even more. Software is very important for Nvidia because if the company was just a hardware company, margins would be much lower than what they are now. Also, many companies are now making their own AI chips, so Nvidia needs software to move forward as other tech companies try to reduce their reliance on it. Since software is now a big part of Nvidia's whole ecosystem, even if other big tech names come out with their own chips, most of them would probably want to run on Nvidia's software as well, or at least be compatible on it. Additionally, Nvidia previously talked about how it's seeing a $1 trillion long-term available market opportunity. The company is seeing a $100 billion opportunity in gaming, $300 billion in data center systems, $150 billion in AI enterprise and DGX cloud, $300 billion in autonomous machines, and $150 billion in Omniverse enterprise. It's no surprise that Nvidia's data center segment is the company's main focus right now, as demand for data center offerings has been skyrocketing since the release of ChatGPT kicked off the generative AI boom. And this becomes extremely obvious if you take a look at Nvidia's revenues. For example, in fiscal year 2021, Nvidia's data center segment accounted for 40% of its total revenue, and that percentage jumped massively in fiscal year 2024 to 78%, completely overtaking the company's other segments. And to top it all off, Nvidia has a net cash position on its balance sheet. In fact, it makes money on its cash, generating over $600 million in interest income over the last 12 months. Now, all of these points make Nvidia stock an attractive one for growth investors. However, there is a main concern that some analysts have that could threaten the stock's growth. So, let's find out more about it. Hello everyone, and welcome back to Investocracy.
Just looking at how much Nvidia's data center business has grown and is expected to continue to grow.
Yes.
And I was looking at other companies, right? If you look at other companies that have grown a lot in the past, like Tesla had a year in 2013 when its sales were up 387%. But it didn't even have $2 billion in sales.
Right.
And you're talking about a company that is growing its sales on an annual basis, doubling, tripling, but the sales are in the
Really
triple
big numbers.
digits.
Yeah.
Billions of
Never
dollars.
seen anything like this.
I mean, has any other company been this big and been continuing to grow by this much?
We've never seen anything like this, ever. There's nothing like it. What's also interesting is that NVIDIA, and we'll see how this plays out, but NVIDIA's also jacked their gross margins. In other words, they're selling everything they make. They're making things as fast as they can. They're inventing and iterating faster than any chip company really has ever. But they're also sticking it to their customers, and they're raising their prices so much.
Successfully.
And successfully, because the old saying used to be, no one ever got fired for buying IBM. Well, right now, if you're building a data center, you buy the NVIDIA chips. It's just what you do, and whatever they're going to charge you, you're going to buy those chips. So it doesn't matter if it's a build out happening with, but again, you have all their customers, many of their customers saying, we're going to start to design our own chips. Now, I doubt that Google, Meta, Amazon are all going to be able to create chips as good and as well as NVIDIA has. It's hard to do. It's the hardest thing maybe that's ever been done. So they might not have the same kind of success. But when all of your customers are trying to invent a competitor to the product that you are selling them, you might want to worry about that. So NVIDIA's, they're making a lot of money, they're taking a lot of profits, and they're innovating at an incredible pace. But their customers don't like paying as much as they're paying.
Although Nvidia's pricing of their chips may be deemed expensive, when comparing the price to the quality you are getting, the price becomes a reasonable one for these high-quality chips that every data center needs. Also, there is another main concern, which is the cyclicality of the chip industry. Nvidia is not a software as a service company with consistent inflows. It sometimes gets huge spikes in orders. For example, Meta Platforms plans to spend $10 billion on Nvidia GPUs by the end of 2024, which is a massive purchase, but not an annual recurring expense. However, what some investors need to keep in mind is that companies like Meta are buying relatively old chips compared to what Nvidia has planned in 2025, which is the B100 and R100 announced in the past months. This all means that there will still be demand for the new Blackwell and Rubin chips as they provide better performance overall. With that being said, the company is working on new technologies consistently which are far better than what it currently offers and what competitors offer as well. And this will create huge demand as tech and AI companies are looking to improve their data centers and handle more and more data. For example, as we all know, large language models require huge amounts of data storage, so with the new chips, we will see growing demand on these chips. Moreover, last month, analysts at Morgan Stanley said that there were no signs of a pause in growth during the transition to the Blackwell chips, with underlying demand still strong. This all leads us to the question of whether you should buy Nvidia stock now or wait until after earnings, and we're going to answer it right now. But first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video. Now, the answer to this question depends on what type of investor you are. For those looking to buy ownership in a business with a strong track record of execution, savvy management, and technological tailwinds, and have plans to hold it for the long term, then Nvidia is the right stock for you. If, however, you are looking to jump into the stock before earnings in the hopes that it will pop so you can make a quick exit, then there is simply no way to know for sure whether Nvidia stock will go up or down after it reports on Wednesday. Over the past month, we've seen many tech companies and even names in the Magnificent Seven reporting great earnings, but their stocks still dipped because the Q2 guidance disappointed investors. So, unless Nvidia significantly boosts its Q2 guidance, the stock could tumble even if the earnings are stellar. On the other hand, if both earnings and guidance are to investors' liking, the stock could go up after earnings, and maybe earnings will even be the catalyst that will push the stock to over $1,000. In fact, right before earnings, 3 firms on Wall Street upgraded their Nvidia price targets. First, we have Stifel, which raised its price target to $1,085 from $910. Also, there's Barclays, which raised its price target to $1,100 from $850. And finally, we have Baird, who went from $1,050 to $1,200. Barclays said that all signs point to Nvidia stock going higher and that the company can capture incremental revenue upside due to pricing on H200, which will start shipping in the July quarter. Additionally, Barclays projects Nvidia's data center segment revenue to be around $23 billion in the first quarter, extending $24.5 billion in July, surpassing street estimates of $21.1 billion and $22.8 billion, respectively. They also added that while investor concerns through the quarter have largely centered on a potential air pocket in the middle of the year ahead of the Blackwell launch, they still don't see evidence of this occurring, with the tone from their checks remaining mostly unchanged. In my opinion, investors who really believe in the company's long-term potential could reduce their risk by buying some shares before earnings to not miss out on a rise if the earnings are great, and buy some shares after earnings in case the stock goes down. Right now, investors continue to underestimate the strong demand for AI and the fundamental changes it will bring to the fore. Nvidia is a leader in AI chips and technology, which are in high demand as companies invest heavily to improve their data centers and AI capabilities. Therefore, Nvidia remains an attractive stock to own given its leadership position in a high-growth market. However, short-term traders should exercise caution going into earnings, as the stock could see volatility if guidance does not substantially beat expectations. Overall, Nvidia's upcoming earnings will be an important indicator of whether the momentum behind the company and its stock price, or even the entire market, can continue. So, what do you think about Nvidia stock? And what are your expectations for Nvidia's earnings this week? Let us know your thoughts in the comment section. And don't forget to tell us what your valuation for Nvidia is. If you would like to know more about the latest updates about companies like Nvidia, then go ahead and click on the next video on your screen.